What's up, guys? How are you this morning? So I'm here every Monday and Thursday for right now, and I'm going to be answering any questions you guys have. Just kind of going through what I do in the morning, the news that I look through, how I get ready for the day, and of course, taking your questions. I'll take them on trading. I'll take them on politics, markets. I don't really care. Whatever you guys want to talk about, I'll talk about. So I pulled up a couple things. So today, if everybody doesn't know, it's Jobs Thursday. So the jobless numbers come out. So jobless claims. Another 793 Americans filed for new unemployment last week. And our expected number was 760,000. So my biggest thing, and of course we have continuing claims from that ended January 30th. They're up also. So the problem here is that we're talking about this great recovery, and we have Trump that was saying it was the greatest economy of all time, and then all the China plague happened and everything, and we were on our road to the greatest recovery ever. That's not the case. There are so many people that are out of work. Businesses, all of these companies are reporting terrible earnings. The numbers just keep continuing to climb. So I don't really understand how we are in the greatest recovery of all time. I don't understand why markets are where they are. I don't understand. There's just so much stuff I don't understand. It doesn't make sense. None of this makes sense. The only thing that makes sense that markets are going the way they are is because the Fed is putting in trillions and trillions of dollars. If we go back and just look at the first couple stimulus bills, the CARES Act, they don't care about anything. And like I think we were at 10.2 trillion after just a couple of months, maybe 3 or 4 months. Not only that, they weren't adding that to the national debt because that was allegedly going to be paid back. There's zero chance that gets paid back. Just like they said that you cannot evict anybody. You can't evict your tenants anymore if they can't pay their rent. And they say, okay, well, these people that are not being evicted, they get 6 months or whatever to not pay their rent, and then they'll pay the landlord for it. That ain't going to happen either. So this is all nonsense. This recovery is nonsense. And every single Thursday, it just keeps showing us how much nonsense this is. When we were in, say, August or something, we were at 1 million. They tell us how great this recovery it is. It's now February 11th, and we are basically at 800,000. So if you want to call that a recovery, go for it. But that ain't a recovery, in my opinion. Let's go to the next thing. I'm going to see what you guys are saying. I feel like all stimulus money is going to the markets and no one can spend it. 65% of all dollars. Yeah, this is really, it's really something. Okay, let's go to, I want to look at Irobot. Now, Irobot, for me, this was a great value play. I had tons of puts on it. I believe I own shares of Irobot, and when all of this GameStop and AMC stuff was going on 2 weeks ago, all of a sudden in our Paul Shorts chat, somebody said, have you guys seen Irobot? And Irobot skyrocketed. I heard that Irobot got a little bit of a short squeeze on it, and that's why the stock price jumped up. I think it was at about $80 a share, and now it is at $127 a share, and it's even higher this morning. Last I checked, they were up 7%. Now they're up 9%. So there goes my value play on Irobot. Let me tell you my price that I had on them for value. It was between $46 and $105. So I was starting to buy them pretty early, but yeah, that ship has sailed. So I like Irobot products from what I'm reading. I'm going to get them. They beat earnings, so maybe this is justified. They are a great company. They're in great financial shape, but the problem is now they're incredibly overvalued. So by about $35 a share. Let's take a look at their chart. See if we got some kind of gap up this morning. I'm not seeing anything yet. Yeah, a little bit. We got a little bit of a gap here. So we'll see what happens. They gapped right up to their resistance point. And This is back. This was the short squeeze right here. And you saw that just the massive influx of volume. But overall on this trend, let's see. Their vacuums are mad clever. So their vacuums are awesome. Their vacuums also have mops built into them now. So when I move into my new house, I'm definitely going to get one of those. So, and I'm really excited. Thank you, Seth. So we have a beautiful downtrend on Irobot right now. And you're saying, how can this be? Because the stock price is going up. This is exactly what we call a snapback, guys. When the stock price is falling down on us, when the stock price is going up on us, but the overall trend is heading down on us, this is what we call a snapback. This is when traders, let's say you're short right now, this is when traders are going to exit their position and say, this thing is going against me. I got to get out of this stock. It's up 9% today. So if I'm short, I'm losing 9%. Not true. You are losing 9%, but your overall trend is so beautifully down right now, going right through the sweet spot. I do see this thing coming back to about this 114 area, and we'll see what happens. There's a very heavy resistance point here at about $80. I don't know if that's going to happen, but we'll see. This is where there's that heavy resistance, about $114. So Irobot, I'm just going to kind of sit tight. From a value play and a chart play, this thing is out of control right now. Yeah, let's see. What do you guys got for me? Somebody talked about. I did say that I wanted to get one of these Irobot things for my house, and the first thing that somebody warned me about was it's spreading dog poop all over the house. Luckily, I don't have dogs, and I don't have kids either. Not that kids poop on the floor, but you never know. So let's go to Kraft Heinz. Kraft Heinz had an interesting last couple of years. They took a big hit, and I can't remember what it was for. Back in, Seth said he'll poop on my floor. That would be wonderful. Kraft Heinz, they had an incredible drop maybe about 24 months ago. I can't remember exactly what it was for, but they were, I thought that they would be something special. It's a great company. It's kind of an American staple. I saw this morning that they sold off their nut business to Hormel, which the only thing I know that Hormel makes is those cans of chili, and I'm assuming soup and stuff, but they did it for $3.35 billion in cash. So I kind of like that they're diversifying a little bit, or divesting a little bit. These kind of companies, I don't like when they get so big for their own good. I think AT&T is a wonderful example of that. HRL. AT&T is a great example of being too big for its own good. Hormel makes Spam. Okay, thank you. I don't eat Spam, but I know some people do. So Kraft Heinz, let's see, they're up today. Hormel is down today. So that's typically how it goes with mergers. The company that is doing the acquiring, they typically drop, and the company that is selling off a division or selling themselves or whatever, they are the company that goes up. So let's take a look at Kraft Heinz on the chart. Let's see if something interesting can happen here. From a value perspective, this thing is incredibly overvalued. My price is between $7 and $10 right now. So if we want to trade this, Seth, I like that. So if we want to trade this, let's see what's going on. They were definitely in a downtrend, and then they've had, in the last week, they've had a beautiful sweet spot reversal. So we are now moving up in the sweet spot. The sweet spot for you new people is between 32 and 80%. This is the area where you have the highest chance of making money, which is great. I'm going to take a look over here. We are over all four of our major moving averages, which is 25, 50, 100, and 200-day moving averages. That's a lot of resistance that's out of the way. We got a little bit of a gap up today. If I am playing Kraft Heinz right now, or if you want to play Kraft Heinz, this is something to keep your eye on. The market opens in 20 minutes. If you want to throw a tracker share on this, tracker share is one share just to be involved in paying attention to the stock. So every time you open your brokerage account, you see that it's there. You don't forget about it. And today, if I get some kind of engulfing green candlestick like this, I'm going to be, I might be buying Kraft Heinz. there is a resistance point right here, a little above 35 bucks, which it shouldn't be terribly difficult to get through. Let me zoom out a little bit. I want to see this from a long-term perspective. Yeah, I mean, Kraft Heinz is going to be something. So I want to point something out to you guys. We can see the candles right over here. This is where it had that major drop, when I was telling you about. So that was in February of 19. The thing that I want to show you guys is we have our high right here. This is our high, and this is our low of this long-term 18-month chart. And we are right at about halfway. So this is the 50% rule. You guys that have been with me for a little while, you know that the 50% rule is very important and very prevalent in today's market. What that means is that you take your high and your low, and then you go about halfway through. And that 50% of the high creates a very, very strong resistance point, and it's going to be very challenging to get through. You can see that Heinz has kind of tried here, really tried here to get through that mark, tried again here to get through that mark, and we're kind of creeping back up. So let me draw these lines one more time. This is your high, this is your low, and this is your in-between. And this area right here, this is all called overhang. And overhang is a lot of resistance just pushing down on you. So for whatever reason, when you try to get through this resistance area of 50%, you just have all of this negative pressure coming on top of you. The only thing that's going to send this thing up like this is a lot of volume. And when I say volume, I'm going to need volume bars like this consistently for at least 10 days, minimum 10 days. And then it has to stay pretty consistent. It can't fall off on me, or I can't have a lot of red volume bars coming in because people start taking profits. A reason why you see this overhang is because once the price gets to here, people say, oh, it really hasn't broken through there. I'm going to start selling, and I'm going to start taking my profits off the table. So what we need is a lot of good buying volume to come in to push this thing through. So that's a 50% rule, very important. Let me look at some of your guys' questions, see what you got here. Can you explain how you see support and resistance? I seen somewhere, someone said, try to touch the most candles with a line. I don't really understand your question, but I always say that you're going to be able to see your own support and resistance eventually. Here's an example of support. I dropped down here, so this is a new support level because this thing, it tried to move down again and it kind of stopped. Tried to move down again, kind of stopped. So you can see that there's going to be some kind of drop right here. Hi Mo, I love you. Thank you. This is where you're going to have your support line. So when you kind of just zoom out and look at things, you can kind of see where there's support. And this is just something that's going to come with repetition over and over. What I used to do is I used to go through 500 stocks every morning. I just had a list, A to Z, and I would just go through them. And I would just keep looking and looking and looking and seeing which stocks fit the criteria that I was looking for. So next Monday, I'm going to go over a method for you guys to kind of practice going through these lists of 500 stocks that you're going to have to put together yourself. Just type in 500 tickers. Doesn't matter what they are. You're not going to buy them. You're not going to buy all of them. But this is what I'm going to want you to do just to get better and better at seeing things over and over and over. So that's what we're going to do on Monday. I just decided that right now. So you can kind of see there's a support line here. Now let's go to the resistance part. And resistance is equally, if not more important than support, just because you got to know when to take your profits off the table. So the fact that this thing has tried to get through here, kind of tried to get through here and here, you can kind of just see that there's some kind of resistance going on here. And since we're zoomed out enough, this is where our support is. So we're just kind of consolidating in this area. So hope that answers your question. If it doesn't, or if you want to talk more about it, if this is kind of resonating with you, go ahead and join the Mo's Muscles Patreon group, and we could talk about this all day. I see that I have some notifications on there that I'm going to answer after the show. I go in there and make little videos for you guys about your individual stocks, questions like this about support and resistance, and yeah, it's great. Let's see, what else we got? All right, I do have HRB on my list. I saw somebody mention it. So I'm going to show you guys how I played H&R Block. H&R Block started out as a value play for me. And then we started trading it, and I said, okay, we need to do something with this to start adding to our position. So H&R Block, obviously the tax people, when this was back in this little area of all red, we were starting to come up. Our red crossed over our yellow, and if you guys are kind of confused about what I'm talking about, red crossing yellow and whatnot, go to the Everything Money YouTube page, go to the Stock Trading 101 playlist, and everything that you need to know is in there. I got people that are telling me that it's their Bible. They're just watching it every single morning, and that is what it's intended to be. And the quicker you learn that, the better off you're going to be. So we were under 32% here. We started to move up towards the sweet spot. This is when I threw on one tracker share. I literally bought one share just to make sure that I looked at this every single morning to see what it was doing. Right when it crossed over 32%, I added on this day right here. And there were quite a few of the Mo's Muscles patrons that did get in on that day too. Now the next day, we had a 10% run up that morning. And for me to go in and make, it was 12% within 7 hours of the market being open, I said, okay, I want to take some profits off the table because this run is not necessarily warranted. And lo and behold, later that day, the stock price pulled back. So this wick right here, that is the stock price moving up during the day and pulling back and finishing down here. So that day we made 10, 12%. Then I became very patient. I waited. I did not do anything for 2 weeks. And we had people that were freaking out saying that we want to buy, we want to buy, we want to buy. Well, it's all about being patient. Trading is about letting the trade come to you, not going after the trade. Every time that you go after the trade, you're going to lose. We had decelerating volume. We had a lot of resistance to get through here. We had resistance to get through right here. And then, of course, we still have a resistance that we're trying to get through. So I added back on this day, and at the time I added, this green candlestick was completely filled. We were in our sweet spot, very, very right in the middle of it, ideal for making money. And we added. So again, I'm going to add, I see that it's up today right now pre-market, over resistance. If I get some good green volume, at least what it is from yesterday, and a little bit of something like that, and that would look like this over here, I am going to be adding to HRB again. My target price to get out is about $24 to $25, and let me show you why. Again, it's one of these stocks where you have your high, your low, and your in between. And your in between is about right here at 24 bucks. So once it gets there, I know that we're going to face some very difficult resistance. So that's my exit strategy on this, to get some profits off the table. People always ask, how do I know when to take profits? This is a good example of when you know how to take profits. Zoom out 18 months, see if you're in that 50% range. Once you get to 50%, take your profits and you will do well. Question, when trading, is it better to do everything at market open? Or do you see better results when trading closer to the market close? That's a good question, Tim. I trade based on what the chart gives me. I don't try to time things. I don't try to time markets, and I don't try to time in and out. If it's at 3:45 p.m. Eastern time and the chart is setting up for me, I'm going to get in. If it's 10 o'clock in the morning, I'm going to get in. So it has to do with when the chart, when my pattern lines up, and that's whenever I have the chance to make the most money. That's what I'm going to do. So good question. Let's see, what if it breaks that 24%? So Ryan, if it breaks that 24%, it's very possible. Now, what it's going to need is a lot of volume, just like I think it was Kraft Heinz that I was talking about. We're going to need volume bars like these two to get through that region, just because once it gets to that $24 area, just like I said, I'm going to take my profits off the table. A lot of other investors, including big hedge funds, are going to start taking their profits off the table, and that's going to drive the price back down. It's not until there's a lot of influx of buying volume that's going to push that thing through that 50% rule area. So it's HRB at buy at $19. From a value play, it is. I mean, I can't really. I'm going based on what charts are telling me right now. I guess you could say it was buy at $19. Harry, I think you're in the Patreon Mo's Muscles group. Message me in there, and we'll talk about it a little bit more. What would you say to people who want? Okay, that's a good question. What would you say to the people who succumb to the greed of always wanted to go up a little bit more? And this is something that I try to teach, and Paul and I talk about it all the time. We do not have FOMO. I am perfectly fine missing out on gains. I always tell people, especially with these crazy stocks, if the price goes up and say you're up 130%, if I'm making 130% on something, which one of the patrons did yesterday, I'm totally cool making 130% and I'm gone. Now, if it goes up another 100%, okay, that's what happens. There was a stock that I was in. Let's see. I bought it in 2018. I owned 1% of the company, and this thing went up about 800% on me. I got out of it. Since then, the thing has gone up over 1,000%, and it doesn't bother me one bit. I made the money. I exited when I wanted to. I stuck to what my plan was in 2018. It took me to 2020 for that plan to execute, but we did very well. And now that it's doing something, it's going based on, it was a pharmaceutical company. They were involved with HIV and breast cancer, which was exactly what I wanted them to be doing. Right when coronavirus came out, they started going into coronavirus. I said, you guys should not be going into coronavirus. We need to focus on breast cancer and HIV because that's where the drug is. And they decided not to. So I pulled my investment, and that was that. But the problem, that's where when he says, how do you know not to be greedy? You really need to teach yourself not to have FOMO. And I joke about it all the time. We need to have a FOMO boot camp to get rid of people's FOMO. Let's see. Do you guys ever trade covered calls? Yes, we do. We sell covered calls on positions that we own, and it's a big part of our strategy. Reed, good point. Longshot asked a real question. That's a good one. Let's see. How does the 52-week high and low determine stock growth or loss potential? It doesn't necessarily determine the growth or loss potential. It kind of gives me that new resistance area. It just gives me a little bit of a hint. It's not always going to work out that way. This thing can definitely go up and get up to its all-time high, and I hope it does. That would be great for us because we're going to catch it going up. But it just gives me a little bit of an idea to say, okay, now I want to be cautious. Let's take some profits off the table and put some money in our pocket. And that's exactly what that does. Let's see. Is Paul in here to get into trading? That's a good question. All right. Let's see here. I don't think you covered it, but maybe you could do a video on covered calls later. Neil, I think you're in the Mo's Patreon, Mo's Muscles group, and we can definitely do that. And I'm thinking about, I know that there's a lot of questions from you guys about how to, like when you're actually in your platform, how do you actually enter the trade? So that's something that we can do. Let's see. So you use it to decrease. Oh yeah, I'm not talking about options right now. We can talk about that some other time. All right, I want to do one more thing. I want to look at this Bumble thing. So I guess Bumble is going public tomorrow at an IPO of 2.2 billion. Now, I get a lot of questions, and Paul and I get a lot of questions. Do we trade IPOs and SPOCs, which I don't know if this is a SPOC. I don't think it is. I think that they were actually able to raise the money without a SPOC. Yeah, they went through Goldman. Okay, so it's not a SPOC. Now, do we trade IPOs? IPOs are very difficult to trade anytime, but especially on a chart, and I'm going to pull up Airbnb just to show you guys. So I've said it before, and I'm going to say it again. The time that a chart kind of tells me a story. So if I go and look at a company like Facebook, for example, I have at least 18 months of material to go off of. And this kind of tells me a story. I can see how the stock behaves. I know what it does when it, SPAC, not SPOC. SPAC is a terrible name. I'm going to call it a SPOC. Airbnb, because it should be called a SPOC. It's a great name. All right, so this is Airbnb. Airbnb went public in December. This is all I have. So it's kind of like reading a book and only having the preface of the book. You don't really have a lot to go based off of. This thing has moved up and down like this, but I don't really have any true resistance or support. I can say that I have some support here, and here, but really it's not that much. I can't go back any further in the chart, like on a Facebook. And let me show you here. Let's go out here. I can't go back on a Facebook and see that we have support lines, say, at these 3 points, like right here, and right here. And resistance lines right here. This is kind of tried to get through resistance. So that's kind of, it doesn't give you the whole story. So that's the reason that I don't trade IPOs. And then from a value point of view, it's just not enough information. So when it comes to trading on charts, I need at least a year's worth of data before I get into it. And that's perfectly fine with me. There's thousands and thousands of companies that I can choose from. I don't need to go in and choose an Airbnb instead of instead of going with some kind of IPO. Let's see here. Do you exit your trades if earnings are approaching? Great question, Bogdan. Yes, I do. Anytime that I see earnings coming up, it's not that I exit 100%, but I will reduce my shares significantly. I'll definitely take my profits off the table if I have them, or I will just reduce to one tracker share. So rarely do I exit the entire position, but when it comes to earnings, and I said this on Monday, Apple reported their earnings a couple weeks ago. They crushed sales, they crushed earnings, they crushed everything that they did, and their stock has been coming down. So because their forward guidance is not so good. So it's really, I call earnings a crapshoot. It's definitely a crapshoot how the stock is going to react. So sometimes you win, sometimes you lose, and I'm just not interested in playing that game. So that's why I go ahead and reduce my shares. Good question. Let's see. Mo, do you use trailing stops? If I'm doing a day trade, I do use trailing stops of 5%, just because that changes so quickly on you. If I'm trading a little bit more with a risk on, like I'm trading below the sweet spot or something, I'm going to use trailing stops. If I'm trading above the sweet spot, above this 80% area in this what I call overbought area, where there's a higher probability of the stock falling, I am going to use trailing stops. Good question. Do you reinvest all of your money? Do you reinvest all of your profit back into the market or stash some away? Natalie, it depends on the trade. Like for example, I took my profits in H&R Block last week, and 2 days ago I reinvested all of it plus more into it. So it really just depends on the trade. I would say that I do reinvest all of it just because I have my little 10% of trading money, and that's what I use to trade, and I just go from there and continuing on. I want to cover one last thing before I get off of here, and that's this number right here. I just noticed it. It's just something that picked my mind. So this is the difference. So this is the difference between the bid and the ask, and this was just 75 cents. Now it's 37. Now, yep, okay, there you go. So the ask is what the market maker wants for the stock. The bid is what the buyers of the stock are willing to pay for it. The difference is that difference in between. When you're trading, you need to make sure that this difference is 1 to 2 cents and no more, meaning that there's not a lot of manipulation from the market maker that's kind of trying to get more for the stock than it's worth at that second. So this typically happens. You'll see this in the morning between 9:30 and 10 o'clock. So I typically don't trade between 9:30 and 10 o'clock. I let things settle down, let the overnight trades go through, and yeah, that's what I do. So make sure you pay attention to that bid and ask. Shorts check for TraderMo and watch. I'm not wearing shorts because it's like 2 degrees outside, and my watch is a Rolex Submariner without the date on it. All right, I'll do one. If I see one more question, I'll answer it. It's 9:30 and the market is about to open. I trade every. Let's see. Did the oyster? So Llewellyn, good question. This will be the last one. Very sad. I placed the order for it, and the company reached out to me a week later and said they don't have it in stock and they're not getting it in stock, but I could buy it used. So I'm kind of deciding if I'm going to do that or not. So. All right, guys. Is that really a good question? Neil, do you have a better one? I'm willing to stick around for it. I'm glad Paul's in here answering some questions for you on options. Nope. Good one, Neil. Thank you. All right, guys. Well, that was great. On Monday, I'm going to go through that method of how you can better learn to look at different patterns. And it's just going to be, it's kind of like a boot camp. I'm going to send you guys, I'm going to give you a list of 500 stocks, and I just want you to go through them every morning and it's all about pattern recognition. And you're going to see I'm going to give you 4 patterns that I want you to recognize over and over, and that's how you're going to get better at this. I didn't feel 100% confident in trading until about 2 years into trading. So that's when I knew that everything that I was doing was pretty much right. So give this thing time, and you guys are going to do well. Just trade on paper if you've never done this before, and you will eventually prosper if you just stick to your guns. So, all right, guys, I will talk to you on the live stream this afternoon, and the patrons, I'll talk to you in the Patreon. So if you want to join the Patreon, it's in the link below. Join the Mo's Muscles middle tier, and you have access to me all day and night. So have a great day, guys.